All right, it's Friday, options expiration. We got some housekeeping to do today. Market is very ugly still, which is okay because, as you can see here, we still have a 56% downward bias to the portfolio, or options portfolio. So we're actually in pretty good shape. Let's start off with the watch list. A couple of names that that jumped out at me this morning when I ran the screens. First one, Marsh McLennan, MMC. This thing had this nice classic cup and handle formation, kind of broke through the lip yesterday on good volume, but really breaking down today. It's not great to see. Same thing if you take a look at the weekly. Nice breakout, but kind of gave it all back, so maybe a false breakout. We'll continue to watch it, see what happens. C-Day. So this is Sheridan Hcm holding. Really ugly on the daily. Kind of broke through this support here around 60 bucks. Continues to fall today. I'm going to wait, see if it comes back up, maybe test these moving averages that are now downward sloping, the 20 and the 50, and maybe take a short bias towards that. The weekly, same thing. So the 20 crossed the 50 to the downside. This thing is just really in a massive downtrend. If it can come back here, up here, and kind of hit this congestion area, I'd be inclined to take a short position or downward bias. GNRC. All right, so GNRC, similar breakdown. It had this support here. I'll call it around the 250 level or so. Broke down yesterday, continues to sell off today. The weekly looks really broken. I'd wait to see if this thing comes back up and retest these downward sloping moving averages, and then I'd be inclined to take a downward bias. Lots of negative names. This market just dictates, looking out for just stocks that are breaking down. Take-Two Interactive, breakthrough, call it this 141, 142 area. Was down yesterday on good volume, coming back a little bit today on the weekly. It seems like it broke some key support here. So I'm going to wait and see if it can recover a little bit, and then maybe we'll trade it to the downside. EFX. Equifax. Big down day yesterday, gap down. Maybe having some support here around 205. It's up today. Take a look at the weekly. Also seeing some support down here as well. So I don't know how excited I am to take it to the downside here. Maybe I'll wait for it to come and retest these moving averages, the 20 and the 50 week, which are now crossing negatively. And if it could retest that and starts to slope down again, maybe we'll take a small trade to the downside. Big gap down yesterday, big volume, broke support. It just looks really ugly on the daily. I'm going to wait to see how far it comes down. If it could retest this level here, 145, 146 or so, and then start to show some weakness again, maybe there's a downside play here. On the weekly, you can see there's definitely a new downtrend in place. I'd like to see it come up and retest these moving averages. You see the 20 and the 50 are about to cross, bearish cross. I'd like to see this stock come up and maybe find some resistance up here, and then we'll trade it to the downside. Okay, SVB Financial. This thing, that's funny. Look, it gapped up today. Did they report? I was looking at these before the open, so this thing is having a good day today. Okay, so they beat their numbers. It looked like it was looking like it was breaking down. It came up here. It's retesting this 50-day moving average. It's still in a downtrend. So it hasn't really broken its downtrend, so there might be some downside activity, a trade here. On the weekly, this looks interesting. So it broke through the 20 and the 50 week. They're about to cross negatively today. It came up, retested the 50. Can't really break it. I would say if this thing starts to show some weakness up around here, I'd take downside bias to it. worldwide. Signature Bank. Big sell-off yesterday, following through today. Stock is in a downtrend. Maybe it's going to come up here and test these moving averages that are sloping lower. Maybe take a downward bias to it. Same thing with the weekly. You can see here the 20 sloping negative, the 50 just sloped negative. They may cross. Maybe the stock's going to come up here, hit this congestion, and continue downward. I'd say that this level here, around 160, 150, seems like pretty good support, but it's still a long way down. So MPWR, monolithic power. This has been basing here. It's below its 20-day, its 50-day. It hit the 20, hit the 50, bounced off pretty aggressively yesterday. It's following through today. On the weekly chart, it looks like the 20 is about to cross the 50 to the downside, and it's having a rough time getting through these levels, so it's now acting as resistance. There's a lot of congestion right here, so it'd be interesting to see which way it breaks. Might trade it to the downside. Illumina. I actually tried to get some trades off today. It's pending, but the options that I'm trying to get are just super thin, so I'm not having much success in getting them off. But anyway, this thing hit its 20-day and 50-day yesterday, sold off, continues its sell-off today on a weekly chart. Hit its 20-week, is selling off. So this thing is in a downtrend. I'm anticipating that this downtrend is going to continue. I was trying to take a short bias to it, but it doesn't look like I'm going to get those options off. And another one that I'm trying to get today is Apollo. This thing broke through yesterday. Today it really broke down. I'm in there trying to get a trade off. Not very successful so far. On the weekly, you can see that the 20 and the 50 about to cross. This thing looks like it might be approaching support here around 51 or so, but clearly a downtrend. I would wait and see if it hits this congestion area here, and then I'll try again to take a downward bias. And I don't think I'm getting it off today. All right, some trades today. Let's go to the trade list. Okay, new relic. We took a short position in this. I was up over 50% in this trade, so I basically took half off. So what I did here, the NWR, is the puts that we bought for 665. I took half off today at around 1010, so it's about a 52% return. I got the other half still out there working. Paramount, one I think we did yesterday. Got the puts on this. This is the spread. These are the puts, right? So having an awful day, awful week this week. We went ahead and bought the puts. They were up pretty nice today, so I took half off. So let's show you what I did here. With par, off on it. So we had 40 in total. I took 20 off. There was a $32.50 strike price. We had bought them for $2.06. Today they're at $3.53 is where I was able to get them off for about a 71% return. I got the other half working. See where this goes. I was really trading down in sympathy with Netflix, so maybe there's some more weakness hidden inside here somewhere. And Facebook, or Meta, I took half off. I didn't close it out, but you can see here, yep, right here. So Meta, Facebook. Is that what it's called? Meta? Yeah, Meta Platforms. This was the trade. So we got the puts, bought the puts. Stock is having a really bad week. So we bought the puts on this one, the $195 strike. We bought them for $14.87. I was able to sell some today for $23.30. That's a 56.7% return. Book some profits, that's fine. I'll let the other half work. A couple of names that I closed. for losses. So the first one here, let's go to close positions. So Tenet Healthcare. I had bought, and I messed up. I shouldn't have. Can I put it in here? I shouldn't have bought calls. You know, these had an upward bias. I should have did something different, and I did something different today, which I'll show you. I think it's a better way to go. So trade list, Tenet Healthcare. I didn't move them over to the close position yet. So THC, we had bought the calls. You can see today this stock is just getting destroyed. It's down 14%. I mean, that was just a bad call on my part. I should have did it differently, and I know for next time. But yeah, you can see this broke the uptrend on the weekly. It's a mess. So it's time to. It's, you know, taking losses is part of the game. It's part of the business. So I got stopped out, and I took them out. So you can see here I closed out that Tenet trade. Where is it? Yeah. THC. So we bought calls, $90 strike price for $5.35. I had to get out of them today. I got it 88 cents. So it's about an 84% loss on my my risk capital, which sucks. But it's, like I said, you can't take it personal. It happens. The Splunk is another one that I closed out. Again, just wrong. This one here I bought right around here on this breakout, I think, and I went ahead and I bought calls, and it just broke down. It's just ugly. It was a bad call, so it's out. And I took my losses. So these calls, I bought $140 strike price. These are going out to June 17th. I bought them for $10.47. I had to buy them back today. I'm sorry, I had to sell them today at $5.08. So it's about a 51% loss. Again, I'm wrong. Just I gotta take my losses, lick my wounds, and move on. It's part of what we do. I also took off the Chevron Trade, which I did very recently. I had this spread put in there. I was anticipating this thing was going to break to the upside. It did the exact opposite. Really having a rough day, rough 2 days. Get stopped out. So another loss that I took today here. So you know, I sold these calls, the 175 for $3.95. I had to buy them back today for $1.25, and then the ones that I bought for the 170 calls that I bought for $6.45. I had to sell them today for $2.33. So all in all, it's about a 57% loss on the trade. Now that's why we cap our losses. You know, it's you're going to take losses, but in the end, as long as you can mitigate your downside, you can be successful. Now I have another one that I took off today. This one here is for a gain. So Snap. I had bought puts on this, and I've been taking profits along the way. So went in and we bought these puts. They were $34 strike price for April 22nd. That's today. They reported last night. We bought them for $3.15. The first batch I got off at $4.73. The second batch I got at $6.05, and the last batch I got out at $4.70. So all in all, you know, I took call it a 50-60% gain there, maybe a little bit higher, but in the end it was a win, so we made money. I have a couple of spreads that are coming off today. The first one is Arista Networks. On Arista, I had put this trade on anticipating that today the stock was going to be above 125.80. Now you can see today, I mean, it seemed like I had a chance yesterday, but today the stock is just getting destroyed. It's down 6%. So I closed this out. It's for a loss. So we're not going to be able to collect our spread there. The options that I sold for $1.10, I had to buy back at $7.84. And the options that I bought for 90 cents, I'd sell them at $6.82. So in the end, I basically lost my capital in this trade. And that's how these spreads work, kind of all in one. A couple of new trades I put on. So this is, going long in this market is tough. And I made a mistake by buying just I was going long calls for the long positions, and I'm not going to do that, at least in this environment. So what I did today with AbbVie, I tried something different. So I took a long bias on AbbVie. And what I did here is I did it's a bullish back spread. So it's a bullish back spread, and it entails buying 2 calls and selling 1 call as a unit. So what I did was here is I sold 10 June 17th calls, 150 strike price for $9.87, and then I went ahead and I bought 20. I bought double the amount that I sold for June 17th, 160 strike price for $4.42. So I now have a net credit to the downside, and I have unlimited upside. So the way this is going to work is if AbbVie by expiration, that was the June 17th expiration, if AbbVie is somewhere outside of this zone, I will make money. So if I'm wrong, and you know, today's chart looks really bad, so I mean, maybe I could be wrong, but if it does drop down and it's below this area here of 150.97, I'll actually make money. I'll be able to keep the spread that I have. And with this, I have unlimited upside. So anything above 168.75 is just unlimited upside for me. So I have a way here to take an upward bias on it without risk of losing everything if I'm wrong and it drops. So right now, I kind of hedge my downside. I like doing it this way better, especially in this type of market. As far as just stocks, I mean, this is an ugly market. So, I mean, I'm finding stocks that are weak, and I'm going ahead and I'm just going long puts. So the first one I did here was ticker symbol TECK. I bought puts on this. You can see on the daily it broke through its 2050, and on the weekly it's bouncing off its 2050, which is crossing to the downside. So this thing overall looks weak. I'm anticipating with this name. I went ahead and I bought puts. They're the July 15th puts, $400 strike price. I paid $28.10 for them. I'm up in the trade, but I could certainly think that this stock could be trading south of 371.91 by expiration. This thing is just started a new weekly downtrend. The MACD is starting to roll over, so I feel good about this trade. Into it, I bought puts. This on the weekly chart, you can see it's been hitting this 20 and it's 50, hitting it. Sold off yesterday, continues to sell off today. If you take a look at the weekly, same thing. The 20 and the 50 week are crossing bearishly, and it came up here, hit the 50 week, and it's just bouncing down. So I took a put position on this. Into it, I bought the July 15s 450 strike, paid $31.35 for them. I'm actually up 16% in the trade from this morning, which is good. And I am anticipating by expiration that the stock is going to be trading south of 418.65. So that's where we're at. PVHT. So this one here, I bought puts. So see, if you see on the daily, stock is just riding its 20 and its 50 week down. It's in a downtrend. The weekly, it's came up here, consolidated, sold off a little bit this week, but I like the fact that these moving averages cross to the downside. There's going to be a lot of congestion up here, so I went ahead with the puts. I bought the June 17th $70 strike price, the puts. I bought them for $3.50. You can see I'm up about 14% in the trade as of this afternoon, which is always a good sign. And I anticipate that on or before expiration, the stock is going to be trading south of 66.50. At 66.50. That's where we're at. FRC. FRC, where is it? There. So this is First Republic Bank of San Francisco. Okay. So it had this monster sell-off. It's rode its 20 down, tried to hit the 50 down. Everything is downward sloping. The stock is in a downtrend. If you take a look at the weekly, clearly a new downtrend. It was higher this morning, but has since sold off. So I ended up taking some puts on this one. The FRC, I bought the June 17th 160 strike price, paid $7.90 for them. I'm up a little bit in the trade as of now, so I'm anticipating on it before strike. The stock is going to be trading south of 152.10. General Motors, I did 2 trades on General Motors today. The first one is just a bearish call spread. Where is it? Yeah. Okay, so I'm basically, by next Friday, I'm anticipating GE is going to be trading south of 64.04. And just not a lot of money in this one, but what I did was I went ahead and I sold the April 29th calls, 46 strike price, sold them for 10 cents, and then I went ahead and I bought the April 29th 47 calls, $47 strike price for 6 cents. So there's a tiny little spread in there. Not a lot of risk. I'm not gonna make a ton of money, but it was something. But given the weakness of GM, if you take a look at the weekly here, it's in a clear downtrend. I've also bought puts on it, so I'm anticipating on it before expiration, GM is going to be trading below 37.47. So what I did here with GM was I bought the June 17th $40 strike price puts, bought them for $2.53. Nice, I'm up 10% in the trade. The stock is coming in, so that's always a good sign. Yesterday I had this Facebook spread that I put on. It was going on. It went off as I was doing my video blog yesterday. So for Meta, let's go here. Yeah. So by next Friday, I'm anticipating Facebook will be trading, or Meta will be trading sub 221.37. So I just needed to stay below this here range. As long as it's in this area in the green, I get to keep my spread. What I did here was I gotta find a way to, oh, here it is. Gotta find a way to sort this a little better. I sold the April 29th 220 calls, brought in $3.20, and I went ahead and I bought the April 29th 230 calls, and I bought them for $1.83. So that spread is going to be mine to keep should the stock stay in that lower green area. Henry Schein, I did that near the close yesterday. I'm not sure I'm going to like this one. So what did I do? I did the call spread here. Okay, so that's fine. Oh, this is Home Depot. Hold on. Right. So what I did here with Shine was I bought calls. I bought the July 95 strike calls, and I paid $2.85 for them, and they're trading at $1.90 now. So you can see I'm taking a loss here. See, I don't know. I shouldn't have been just going long calls in this market. I think that was a mistake. It's going to cost me. I'd rather do that back spread that we did with the AbbVie. Anyway, so that's a trade that we got on. What I'm collecting today, did I go through this? So I have a couple of spreads that are up today. So I have JP Morgan, which I feel pretty good about. I was anticipating JP Morgan was going to close below 130.34 by today. It looks like it is. It's at 127.48, so this premium should be mine to keep. So cha-ching. Ring the register. I got Apple. I did the spread. I anticipated Apple staying above 159.84 by today. We're at 163. I feel pretty good, so I think we're going to be able to keep this spread. Juniper, I did another spread for today. I anticipated Juniper Networks to be above 34.85 by today at close. We're looking really good here, so I think we'll be able to keep that spread. Tesla, you know, you make a spread. It's a smaller amount, but if you can do it consistently, it's steady cash flow. Tesla, I anticipated Tesla being above being above 956.66 by close today. Stock is currently trading just over 1,000. So I feel, barring anything crazy happening in the next 2 hours, I feel pretty good about this. We should be able to collect it. This Mosaic, I'm trying to work my way out of it. It's going to be a loss. I felt really good 2 days ago, and I anticipated that the stock was going to be north of $70.77 by today, and just yesterday and today, boy, it was a brutal sell-off. So I'm going to take a loss on this. I'm just trying to unwind the trade now as we speak. It happens. What can I do? Home Depot, I did another spread that's expiring today. Home Depot, I anticipated to be trading below 311.07 by today. It's trading at 302. I feel pretty good about that. We should be able to keep our spread. Intuitive Surgical, this one was very difficult to watch. Had me on the seat of my, in the seat of my pants, on the edge of my chair, whatever the fucking saying is. Anyway, so I anticipated that by today the stock was going to be below 291.48, and you can see this past week it had these major up days. It got all the way up here to almost 310. I was like, I'm going to take a loss on this. But they reported last night, didn't impress. So the stock now is down almost 14%. So I'm feeling really good about collecting this credit spread. Again, you need it below 291, and it's trading at 254 right now. So anything in this green area is money in the bank. Northrop Grumman. Yeah. Where is it? Yeah. This one here's a nail biter. Right? I anticipated that the stock was going to be north of 448.52 by today, and it's at 448.35. So it's pennies away. Either way, I'm going to unwind it at the end of the day, but it is so close. I'm hoping maybe there's a little bit of bull. It was higher earlier, so maybe we can get this thing above into the green. But it's a little bit of a nail biter. We'll watch it. Last one I have for today, and I'm done. So this is Online Technology. Did the spread. I anticipated that the stock was going to be below 431 by today, closing today. Options are expiring today, so I did the credit spread. Anywhere in this green, we get to keep our spread. So 431 was our number. Stock is at 364. So I feel pretty good about collecting this premium as well. All right, exciting day. Friday's always exciting. Thanks.